Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. Well, yesterday we did see that the markets witnessed a sharp sell-off, closing at a 7-month low as far as the benchmarks are concerned. In fact, the broader markets also, the sell-off that we saw there erased 8 lakh crores in investors' wealth in just within the first 2 hours of trade as well. It was a day of full sharpness, high volatility that we saw in the markets. And of course, this was largely led by accumulation of factors like, the global cues, the jitters ahead of the union budget, the geopolitical tensions, and all the factors, FII sell-off and everything that's been bogging down the market for far too long now. Again, when we move into a session today, we're going to be again influenced by mixed global cues, budget jitters, and also what Donald Trump has again talked about as far as the Trump tariffs are concerned. And apart from that, we're also seeing an important cue domestically apart from the earnings, and that is from the RBI as well. But let me first talk about what led to a sharp sell-off on the Wall Street last night. That's a big cue for us. A sell-off that was triggered by the rise of Chinese AI firm DeepSeek that led to AI darling Nvidia seeing its biggest erosion in market cap in a single day in US history. Nvidia's 17% drop was coupled by the sell-off in other chip makers that actually led to the Nasdaq also declining over 600 points on the Wall Street overnight. The 17% plunge on Nvidia erased nearly $600 billion from Nvidia's market value. This is not just about the biggest market cap erosion on any stock that has been seen in the US history, but it's also equivalent to so many smaller companies and their GDPs. That's the kind of large impact that we've actually seen on Nvidia, all due to DeepSeek, and there were worries rising on US tech companies' dominance in the artificial intelligence space right there. So Nvidia flipped about 17%, Broadcom fell 17%, Supermicro fell 12.5%, Oracle 13.5%, Dell about 9% as well, leading to Nasdaq looking at a 3% cut last night. S&P 500, however, slipped 1.5%, but the Dow Jones managed to gain about 0.6%. So mixed cues from there. But following this, what we've actually seen is that Japanese market, the Nikkei, has also dropped in the early morning trading session, but many other Asian markets are closed today due to holidays around Asia, China, Taiwan, even South Korea, the Lunar New Year holiday, Hong Kong's Chinese New Year, Singapore is trading half day as well. So that's a lot of affected as well. We are already looking at the pre-open rates that's indicating, just as how the Gift Nifty was pointing out, to a premium today, 22,887 right now. So slightly better off, about 0.3%. Let's hope that this holds on when the markets finally open in trade. Apart from this, the big cue that I was talking about, India's central bank has announced on Monday a host of measures to inject liquidity into the banking system, including the bond purchases and the dollar-rupee swaps as well, which analysts and traders have said that could be a precursor to the rate cut that we can expect next month now. Remember, the RBI's measures are collectively to infuse 1.5 trillion rupees into the banking system. This comes after months of cash crunch that the system has been looking at, and that had also pushed up the overnight and the short-term lending rates. Now, this has raised hopes that post-budget, when the RBI's rate-setting panel meets for review on February 7th, there could be that final rate cut that could come in as well. So that's another cue that we will be looking at for sure. Let's welcome our guest on board. We have with us Mr. Dharmesh Khan, Head of Equity Research at Chola Securities, joining in. And we also have Osho Krishan. He is the Senior Research Analyst at Technicals and Derivatives for Angel One. Welcome to both of you, and thank you so much for taking the time out for this discussion. I'm going to be starting off with you, Dharmesh ji. I did point out in my initial commentary a whole host of factors that the markets will be looking at. So let's take them one by one to understand better as to how our market analysts and deep researchers like you are looking at all of these factors playing out. Let's take the US angle. First, I
Yeah,
mean, this was DeepSeek I wanted to talk about. How have you assessed the situation right now? Does it really have an impact on India at all, or is it going to be largely restricted to US? What kind of a larger long-term impact could we really look at?
good morning, Sakshi, and good morning to all of you. See, technology by its very nature gets cheaper day by day. So, any technology when it comes new, it is very expensive, and finally, for the mass consumption, because of other advancement, it gets cheaper. With this deep seek, what it suggests is going forward, even AI would be available to people who cannot afford it. So this will increase competition, more efficiency in the system, and entry barrier will get lower and lower because of AI advancement. So earlier, the businesses with more healthy balance sheet or capital were able to do business. Now even with lower capital but higher talent, you can do the same business equally and efficiently. So this is how the impact is very good for India. I mean, anything which India is not doing and it comes at a lower cost is always good for our country. So this technology part, the AI part, we were missing on it. US was the leader, now China is getting it one tenth of the cost. So I do think for the business as a whole, it's very beneficial. But yes, having said that, lot of realignment and recalibration on the business metrics of the existing strong players and the incumbents as well as the newcomers will be there. So we have to see how this space pan out. So it's more of a policy-driven market for next 6 months actually, be it from US, be it from China, or be it from India itself. Policies will determine the future course of action in the near term.
Okay, got that. But Donald Trump also did step up his tariff game yesterday again by talking about he's going to be imposing tariffs on steel, aluminum, in even semiconductors for that matter as well. How are you looking at this increased tariff announcements that are coming in on a day-to-day basis now, sir?
See, Sakshi, I mean, tariff is a negotiating tool for Mr. Trump. Wherever he wants to negotiate, a tariff is the tool he thinks can play out and get the deal in favor of his thought process. Which, to my mind, it's not so easy. And earlier, the he said that he will on day one he will impose 60% tariff on Chinese goods which are imported into US, which has not been the case so far. He is opening a negotiating table through this arm. So this will keep on happening. I mean, this news flow will keep on disturbing us every 3 4 days, and we have to live with it. But I think overall, on the overall scheme of things, some readjustment will definitely happen. You will not have that easy profit from US which you were having, and he would be diving deep into this segment. I mean, segment wise, and that would be a bit of a dampener on the overall economy globally. So India put into place. So I mean, Indian companies which are making profit. Say, I can just give you an example: onshore and offshore. So offshore, wherever there is a cost advantage which is leading to profitability, he may levy a tax out there, so bring it par with onshore. So a company like IT services company will have no choice but to employ more people out there because there is no arbitrage of manpower cost out there. So things like that is likely to come into future.
Okay, got that. Let me bring in Osho into the conversation right there. Osho, now what we've actually seen is that yesterday, 22,800 still was held on to in the markets. Today, again, we are looking at some bounce coming in. The markets have settled above 22,960 now, 131 points higher. That sounds to be, very, very good. Once we have seen such a sharp sell-off yesterday, half odd percent of an uptick coming back into the fore is something that we would look at promisingly. What is your own sense today? At least some sea of green being seen today after yesterday's massacre.
Firstly, very good morning, Sakshi and Dharmesh ji. Well, looking at the overall setup, yesterday we have already seen a consolidation breakout in the benchmark index. So today the market have initially shrugged off the US effects and we are witnessing a gap up opening on Indian indices. But I am expecting that on the higher end, as there has been a consolidation breakout around the zone of 23,000 zone. So that will be a very crucial hurdle for the benchmark index. Even the bearish gap around 23,000 and 23,050 will be very critical for the market. If it sustains above 23,050, then only we can see some kind of bounce, continuation in the bounce towards higher range. But for the time being, I am expecting that one should remain cautious that 23,000 can be acting as a very strong resilience, and one should not get complacent with the opening. One should wait for the market to settle down for first half an hour or 1 hour. Then one can definitely try to look the bets on the higher side, because overall the market is already on the very extreme oversold territory. So any positive trigger can give a very strong momentum. And looking at the volatility also, there can be swings both ways for the day trader. So we need to look for opportunities on the both sides. It's not that from here onwards the market is expected to plunge lower, but either on the higher side we are not very much convinced that it should continue its bullish momentum. So there can be a strong swings on both the sides, and one can try to gauge momentum on either sides. On the lower end, 22,850 should be acting as the support for the day, while 23,050 should be the resistance that is looking as per the data.
Okay, got that. And Osho, if you have to pick out any key stocks for today, what would those be?
Firstly, the first one which is looking very positive on the technical chart is ICICI Bank. Also, it is opening at a very strong gap up opening. So I'm expecting that there can be a very strong momentum seen in ICICI Bank. So one should try to accumulate it. Although wait for some kind of dip towards the zone of 1230, 1225 kind of a zone. That should be apt level to buy this counter. While on the higher end, I'm expecting nearly 1265 to 1270 as a target. And on the lower end, 1220 should be acting as a decent support for the day. While on the short side, Hind Petro is looking weak, so I'm expecting that there can be a continuation in Hind Petro on the lower side. So I'm expecting that the zone of 350, 355 can provide an opportunity to sell this counter for a lower territory of 335 for the day. While on the higher end, I'm expecting 360, 364 is the range where it can see some kind of resistance, and one should keep it as a stop loss also.
Got that. Okay, Dharmeshi, coming back to you, banks is something that everybody will now start to focus on more after yesterday's RBI's, liquidity measures announcements as well. Do you also believe that finally we could be looking at a rate cut coming in? Is that a precursor to the rate cut announcement that could come in on February 7th, something that was still under doubt and question up until thus far?
Yeah, definitely, Sakshi. I mean, these measures are definitely a precursor to a rate cut, which may come on 7th of Feb. And that was much needed as well, because if you look at the numbers which all the banks have reported, in general, there has been a slippage in the asset quality. So slippages have become more higher with the credit cost. Other than that, other matrices were very much in place. So with this liquidity measure coming into place, the rate cut can take effect. I mean, it can, the pass on may happen. Banks, I'm not very sure, but NBFCs definitely, they would be in a much better position to absorb this rate cut and pass on to the clients, where the pain is much higher. I mean, the microfinance and all, we have seen the pain in the system. So much needed push out there. At the same time, if you single out few banks like ICICI, the bank Osho has already mentioned, that came out with a very decent set of numbers. And other than that, Bank of India from the public sector space, this is third consecutive quarter being in the public sector space. They have maintained their asset quality with lower credit cost, NIM stable. At the same time, the advances have grown by 13-14%. So that looks to be a very good opportunity to get into at current levels. Even if you are trading this market for next 2 weeks, I think banks should be having a more positive days than negative days.
Okay, got that. Right. Just 1 minute to go before the markets open. Now, Osho, let's come back to you and ask you on the key stocks right there. You did say ICICI Bank is something you're looking at. Okay, we have the opening rates. We'll first look at those. 22,949 right now. About a 0.4% of an uptick is what we can look at on the Nifty. All the sectors barring Pharma are opening in the green. PSU Banks leading 1.7% higher. You also have the realty names 1.6% up. Financial services, that's up by almost 1%, and the Nifty Bank about 0.9% higher in trade. That's also looking at an opening at 48,500 now as far as the banking names are concerned. So banks, financial names are going to be focus of the day. ICICI Bank opens 0.8% higher, something that Osho marked was a stock that he's looking at. Bajaj Twins, Bajaj Finserv and Finance also open up in trade. IndusInd Bank is the other one, and State Bank of India. These are the top 5 names. So you can see it's banks and NBFCs all the way. What's down? You have Sun Pharma, Dr. Reddy's, Cipla comes out with the numbers today, and M&M. These are, and Wipro also. So IT, Pharma, these are the two pockets within the defenses that are on the back foot right now. Let's look at the broader market. Small caps again on the back foot, 0.1% lower. Remember yesterday this space was the hardest hit in the market sell-off. Over 4% cut was seen on this one. Continues to reel under some pressure. FMCG, pharma and consumer durables are the other pockets that are also losing some ground. Let's look at some of the other pockets that are buzzing. Within the PSU space that's up, you have PFC, REC, IRFC, Steel Authority, Oil India, these kind of stocks that are buzzing. In the broader markets, what kind of stocks do you have that are buzzing in trade? Are there any strong big movers that we can spot right now? Piramal Enterprises, that's up 6.5% in trade. Union Bank of India is 6%. Greenlam Industries is up 5%. You also have stocks like Premier Limited, that's also up in trade. Some stocks right there. Let's look at the Nifty next 50 names, again led by Union Bank of India here. Canara Bank is the other one that's also pulling up, PNB. So again, the PSU banks also pulling up, DLF, that also continues its thick zone in the second day in a row. Siemens is getting a lot of upgrades after the earnings. 2% higher for this one as well, as far as Siemens is concerned. Let's look at some of the main indices now. Axis Bank is pulling up 1.5% higher. You also have Tata Steel post earnings and HDFC Bank also pulling up. Bringing in Osho right there. Osho, you did talk about ICICI Bank, but even Axis Bank, HDFC Bank from the larger banking space is picking up pace. How would you address these two also? Do you think one has to continue to put their focus on the large cap private banks now?
Yes, definitely. Looking at the overall momentum from here onwards, if we expect the market to perform well, then the large cap index or large cap space should start performing well. And looking at the most of the counters like HDFC Bank, it is hovering near a very strong consolidation base of 1640, 1650 odd levels. So I'm expecting that from here onwards also, there is a potential for this counter to have a very strong traction in the coming period. So HDFC Bank, Axis Bank, and ICICI Bank from private sector is looking very positive, and even from PSU counters are also have also started moving upwards. So Bank of India is looking very positive to me. It has gained approximately 4% in the day, and there can be a mix of both the banks that can give very strong momentum to the overall market. So I'm expecting that from here onwards, Bank Nifty can see some kind of outperformance. Technically, the zone of 49,000 is the crucial hurdle for Bank Nifty. The time it surpasses the zone of 49,000, then from there onwards, we can see the conviction returning back in the banking counters on high momentum. So I'd be eyeing more on the banking and financial space also. For example, Bajaj Twins are also looking very positive to me. So NBFCs and banking space is looking very positive.
Okay, got that. Let me get in Dharmeshji into the conversation. Dharmeshji, banking, financial space has a large to look at right now. Who are your favorite stocks from this pocket, sir?
Yes, actually, I started with Bank of India when the market was about to open. So that is, and public sector banking space looks more attractive to me compared to private sector banking space. I mean, the delta you will get is more out there, and the numbers reported by most of them were pretty strong. So Bank of Baroda, Bank of India, SBI at current levels looks pretty much decent buys to me. So are focusing more on the public sector banking space rather than the private sector banking space, just for the delta purpose.
Your Union Bank of India, sir, what would you say there? Sharp momentum, 7% higher post earnings, now 112 rupees. What would you say on this one?
See, earnings were fine. I mean, but I found Bank of India to be more, attractive and stable as far as the earnings are concerned. And if you look at the book quality, then Union Bank of India does not have that, as far as the quality of the book is concerned, as compared to, say, Bank of India. Canada Bank, we were expecting a good set of numbers, but somehow it disappointed us on the number front and the quality of the asset front. So that's the reason why we have, not chosen Canara Bank. Today it's flying off a Union Bank, but the drift and the sustainability of gains going forward will be more on the private sector banking names, which Osho has already taken, and a few of the public sector banking names like Bank of India, Bank of Baroda, and SBI.
That Dharmesh ji, we'll also look at one more key earning that's coming in. First, let me just take one technical view on Union Bank of India, since it's the top mover even in the FNO space today. Osho, Union Bank, how would you trade today? Are you on mute by any chance, Osho?
Okay, yes, I was. See, Union Bank has seen a very strong traction in the day, but overall is facing a very strong hurdle of 21-day exponential moving average, approximately around the zone of 112. So I would rather wait for one more day of buying continuation in this counter, or if it moves beyond the zone of 112, 113 and sustains at higher levels, then it can provide very strong conviction on the higher end. So today is the first signal for a buying traction in this counter, but looking at the historical trend, the 21-day exponential moving average has provided very strong resistance in this counter. So one should wait for it to cross over, and once the crossover happens, then we can see some continuation towards the zone of 118 from a short term point of view.
Okay, got that. Let's also look at one key other number that's very important to watch post earnings, and I'm looking at Kaynes Technologies right there. Remember, the Q3 earnings revenue was up about 29.8% at 661 crores. EBITDA improved 34.5% right there. Margins came in at 14.2%, slightly higher. Net profit improved 47% odd, but at the same time you're seeing a sharp cut on the stock. 46 currently on Kaynes Tech. It's 11.8% lower in trade. Earnings, although higher, slightly below estimates on some of the parameters. Dharmesh ji, do you think the markets are starting to question the high valuations right there, despite quarter on quarter or year on year, some improvement coming in, but not exuberant moves coming in on the earnings factor, and that's what is leading to some cut?
That's always the case, Sakshi. I mean, if you are trading at more than 100 PE multiple, so slight miss creates a serious, damage to the stock price, and that is because the run-up has been very high. At the same time, there has been a second point with Keynes where the management guidance was about 3,000 crores of revenue for this FY25. So they are around 1600 crores in 9 months. So almost, same kind of revenue in the fourth quarter, which is highly unlikely, which may not be the case. So even if guidance is being missed, it is not taken lightly by the market, and but that is why today we are seeing a sharp selling pressure in case technology. But this is, I mean, the risk you are taking when you are riding on such a high value multiple stocks.
Okay, right there. Let's take Osho's view then. Osho, how about Keynes? What would you do? Would you buy this dip or stay away even now?
See, overall, this counter have started seeing some corrective phase after a very long period of time. But the correction in the month of January is approximately 38% and has eroded the gains of last 4 months. So I am expecting that after a very long period, this counter have started seeing some kind of profit booking followed by corrective phase. So better to stay sidelines, wait for the counter to consolidate or take breather, and then only one can look for opportunities to buy this counter at current levels. But for now, it's better to stay sidelines. The counter have seen very strong correction and is now hovering below the 200-day simple moving average. So technically, all the parameters are something on the bearish front for this counter. So wait. My advice will be to wait for some kind of consolidation. Once it happens, then only look for buying opportunity.
Okay, some of the sectors have slipped lower. Pharma, I think that's the one that we need to focus on. 1.7% lower for the pharma stocks right now. What's leading this dip is Sun Pharma. That's also contributing about 12 points on the downside as far as the Nifty is concerned. And of course, there are many other counters which are also again leaning under pressure. Dharmesh ji, pharma stocks for you, how are you looking at them? What is causing the trouble here? I mean, pharma index was the top performing one in 2024, and we were hoping that the strength could continue. There were many stocks were actually coming back out of a long-term slumber. What's the sense here?
Sakshi, I think this is more of a trading activity which is playing
Sure.
out. So, trading shifts of money from one sector to another sector rotation, which normally happens before a big event is to be played out. And the market has already corrected quite a big. So, risk takers will definitely take a chance going into the event of, say, budget on first and then the RBI policy. And with these over measures which have come out, again, this shift of money is there. So, I'm seeing this correction has more to do with tactical shift for say 2 3 weeks, and then again that money will move back because pharma as a space looks very stable, and the global environment as far as equity market is concerned will be volatile for next 5 6 months. So post say 15th of Feb, you may again see reallocation of money back to the pharma space. So if you are an investor in, I mean, for at least a year time of kind of a perspective, then this is the right time to start, deploying small money into the pharma space, and maybe you can go full throttle in the second week of Feb.
Okay, got that. So there you have understood as far as the pharma pack is concerned. Any key stocks, Osho, from the pharma pack that you would like to buy on these dips technically?
See, as of now, I am expecting that there can be some kind of continuation of profit booking, as you have also mentioned that discounter has already seen an outperformance in the year 24. So from here onwards, as Dharmesh ji also mentioned, that there can be some kind of sector rotation that can happen. And looking at the pharma stocks, those are not at a very strong bearish front. They are just into some kind of corrective or profit booking phase. So I will be expecting that there can be some kind of another set of continuation towards the profit booking, and once it happens, once it halts, then one can look for buying opportunities in majority of the counters, because overall space of pharma and healthcare is looking positive on the technical front. It is just one should patiently wait for the correction to halt. Once it happens, the key levels of 200-day simple moving average still holds a very strong support for majority of the heavyweight companies. Then one should try to look for opportunities on the long side for pharma companies.
Right. Dharmeshji, again, the broader markets are the ones which are again pulling down the markets from the high point already. We are now 60 points higher on the Nifty, so we've come off from the day's high point, and what's leading this fall is also the broader markets again. Small caps are down 1.7% again. After yesterday's 4% loss, there is an additional 1.7% cut right in the first 10 minutes of trade is what you have already seen. The mid cap index is down 0.5%. On the small caps, of course, Kaynes is the large pull down factor. It's now 16% lower. 361 WAM, 7.7% lower, again post earnings. Credit Access Grameen 6% lower, again post brokerage houses are reducing the targets, and as far as their view is concerned. CDSL, ITI, SW Solar, Inox Wind, the rail companies like RailTel, Triveni Turbine, Apar Industries, Reddington, all of these stocks are upwards of 4% that you can see as losses on the small cap basket. Dharmeshji, broader markets, what is the right approach for investors to do? A large part of retail investors' portfolios is exposed to mid and small caps, and these are the pockets which are actually seeing such a sharp fall in every day's correction. These are the pockets which are hardest hit. How should one deal with it?
See, actually, you have to live with it. There is no choice. So, but this is always the story whenever a deep correction in the market happens. So, liquidity is very low because when the things are going fine, you have the buyers out there for the small cap and mid cap segment. But when the fall is there, everybody is, suspect, and they want to see the water settled first before entering into mid and small cap. So, there are stories which may be doing fine, but valuation again has been on the other side of the curve, which is the expensive side, and the correction is happening right now. I think this space will stay in pain for some more time, even if the market consolidates and stabilizes. The reason being, in the broader economy, there has been a slowdown, which is reflective in the earnings reported by all the financials, so be it NBFC or bank, as well as the consumption space. And whatever checks we are doing with MSME segment and all, the business activity is definitely slowing down. There are people who are seeking multiple loans for multiple providers because of the stress in the economy. So I think this is being sensed by the market, and this pain is there. So if you are invested, and if you are invested in the right story, you think the fundamentals are right for the company, it's just a passing time, just hold it. You don't have a choice right now.
Don't have a choice right now. All right. Dharmesh ji, we will leave you at that. Thank you so much for being with us in the morning edition and sharing with us all your thoughts right there on the markets and how we can expect things to move on. The macros as well as the micros, you've discussed everything. So thank you. Appreciate your time with us on the show.
Thank you so much, Sakshi.
We'll continue our discussion with Osho now, and we'll try to do some stock spotting for all of you viewers with Osho looking at various pockets in the markets. Osho, more and more sectors are reeling under pressure now. I think the gains are limited to PSU banks, financial services. IT space, I think, is pulling up, so we'll focus on that first since we've discussed the banking space. IT again has been extremely volatile in the recent days and weeks or so. It was being seen as the only space where one could hedge their positions, where one could stick onto in this kind of a volatile market. But again, it's been volatile. Mid-cap IT names were doing better than the large caps because of the earnings performance. Rupee is now largely stabilizing, but again, there are commentaries coming in from the US, and that's again keeping things fluid for the IT names. What is your own approach on the IT sector? Large cap IT names like TCS, Infosys, HCL Tech, Wipro, or the mid-cap ones like Emphasis, where we've seen recent momentum, Persistent, Coforge, Birlasoft?
See, overall, as you mentioned, that this is the space which is actually uh, holding onto the markets. It is actually hovering around the higher zone, even if we are witnessing a very strong plunge in the overall market. But looking at the momentum in IT space, there can be a mixed bit that can be seen. But overall, the technical structure from a broader time frame is still positive. Looking at the overall IT space, IT index, the counter is hovering near the consolidation zone, and I'm expecting that it will require some positive trigger to have some kind of positive momentum in the coming period. But majority of the heavyweight counters like Infosys, TCS, Tech Mahindra, HCL Tech, these companies are looking quite okay on the technical fronts, not very much aggressive on the bullish front also, and not also on the bearish front. They are on the sideways movement. So for a day trader, finding an opportunity in IT space can be easier, but for investor that can be very challenging with the ongoing momentum. While coming to the mid-cap IT companies like Emphasis and Coforge, these counters have started gaining a strong traction, and the overall broader time frame on a broader time frame technical structure, these counters are even looking positive also. So from a short-term perspective, one can definitely try to get a bullish bet in these counters. While from a longer-term perspective, one should wait for the consolidation breakout. Then only it will be very much. We will be having a very strong conviction that there can be a continued momentum in the overall space or not.
Okay, got that. So that's as far as the IT space is concerned. Now we'll come back to all the banks and financials since that's where the action is. PSU banks 1.2% higher. Osho, if I have to ask you to pick out one or few stocks, this space is interesting also because Osho, there is usually this expectation that budgets usually tend to announce some measures which actually prop the PSU banks higher. Now, what is it? The expectation is that there could be some kind of an OFS announcement as far as the PSU banks are concerned. Now, which banks will those be? What kind of momentum will there be? We have to wait and watch. But PSU banks, do they interest you?
See, overall, looking at the technical structure of majority of the PSU banks, then in the last 2 to 3 trading weeks, majority of the counters have started gaining some decent traction. But as most of the counters has already been hovering below the short-term moving average, so there are only few counters which have surged above the 21-day or 50-day exponential moving average. So there will be a very strong limitation on the counters, or one should be staying with the stock-specific approach from the PSU basket. Although the technical structure is still onto sideways to bearish momentum on a broader time frame, but for short-term perspective, yes, we are witnessing a kind of a reversal. And as historical data, there can be a pre-budget rally. This time it is not happening as of now, but obviously we see some kind of positive momentum in the PSE's counter. So I'm expecting that looking at from the PSU banks, Bank of India is looking very positive to me because it has surged beyond the 20 and 50-day exponential moving average in last 2 trading sessions, and also is hovering above the 100 mark psychological mark. So I'm expecting that this is looking quite positive as compared to other PSU companies on the technical front. But again, on the higher end, I am expecting that 116, 117 is a very strong resistance. So that can be a level that one should keep a watch on, that if it crosses the zone of 116 on a decisive manner, then only we can see some kind of continuation. So one should be very much cautious in stock picking from short term, medium term, even from PSCs or from the private sector bank.
Okay, got that. Let's look at the broader markets again. Um, Now 2% lower for the small cap index, mid cap is down by 0.8%. Which are the top losers here? Kaynes, I've already marked 17% lower. Anant Raj Industries is 17% lower. You have NetWeb Technologies that's lower. Prudent Corporate Advisory Services earnings impact 10% lower. PG Electroplast, you have CRM Silk that's dropping. Hitachi Energy, high single digits coming in for this one on the lower side. 361 WAM earnings impact. Strides Pharma, Solara Active Pharma, again the pharma stocks which are lower. Newgen Software, Zen Tech. A lot of these mid-cap IT names are actually losing ground today. Specialized technology-focused companies, Osho, these were the stocks that were in fact garnering a lot of investors and traders' attention just a few weeks ago. I mean, like I look at NetWeb Technologies or Newgen Software, these were actually giving investors a lot of trading opportunities on the higher side and on the buy side. What's the sense here? What's gone wrong?
The majority of the counters like new gen tech or NetWeb has already seen a very deep correction in the last 2 weeks. In the last 2 weeks of trading session, so I'm expecting that there can be a continuation of lower end, because once the selling in these counters happen, then it's mostly attracts panic selling. Majority of the players start selling their positions heavily or entirely once there is any kind of correction happening in these counters, because stability is mostly seen in the heavyweights or the mid cap IT companies. But once there is a correction in these counters, then these counters have the ability to even plunge 10%, 15% in a day. So that is most likely to be seen in these counters as of now. And again, once the conviction returns back, only when the market will stabilize, then only people will again start gaining some buying traction in these counters, and again these counters will start gaining some positive momentum. So I would say that one should stay sidelines from such counters as of now. If not having positions, wait for the market to get stabilized at any levels, and then only can look for buying opportunities. Because when the market is bullish overall, the sentiments, as per the sentiments, majority of the counters gain a lot of trigger, a lot of buying traction from the retailers. But when there is any kind of negativity revolving in the market, then huge sell-off is also seen in these counters. These counters are the first which triggers strong sell-off in the market. So I would advise to rather stay sidelines, wait for some kind of consolidation in the market. If it happens, then only try to accumulate it again in a staggered manner. Do not have aggressive approach buying these counters.
Okay, got that. But there is further fall from the highs as far as the broader markets are concerned. The mid cap has slipped about 1.5% from the high point of the day. That's also led to about a 80-point fall on the Nifty also from the high point of the day. Small caps are now further losing ground. It's dropped 2.5% from the high point again. That's where the pressure is building in. Osho, what should one do in this kind of a relentless sell-off? The excruciating pain that one is feeling in the mid and the small caps, that's happening. I mean, Dharmesh ji did say that, probably one has to live with it and live through this pain till the time things turn better. For traders, it's going to be an extremely, painful space. How would you expect and advise all the traders looking at the mid and the small caps actively?
See, firstly, in such kind of market where we are witnessing a very strong challenges from the last 3 to 4 trading weeks, so I would rather stay sidelines in such market. One should not be very much aggressive in either side, not in the on the side of buying traction or not even on the selling side. One should stay sidelines, stay away from the market. If someone has to take position, then one should again keep a very strict stop losses to the position that they are holding, especially in mid and small caps where we are witnessing approximately 2% kind of an average plunge every day. So that is a strong or challenging environment for the traders fraternity. So I will be advising to stay either sidelines, or if someone is taking positions either long or short depending on the volatility of the market, because as a trader you will be getting opportunities on both the fronts. So it is always advisable to stay with a minimum stop loss so that even your capital get safe in the trading session. So that will be the minimal of advice that one can have in such kind of market. Once there will be some kind of stability, then we can again look for buying opportunities, and there will be a very strong reversal or recovery that can be seen in the market. But as of now, there is no sign of respite in the market on a day-on-day basis. Looking at the global and domestic macro developments, also majority of the economic fronts and our data also not signifying any kind of reversal or any kind of buying momentum in the market. So better to stay sidelines. Once any kind of positive triggers happen in the market, then we can definitely expect the momentum returning back, and that will be an opportunity where one can try to gauge momentum and be on the buying side.
Okay, got that. So that's as far as the view on the mid and the small caps is concerned. Now 2.4% lower, 15,900 now. As far as the small cap index is concerned, it's a 400-point cut. The mid caps are down by 544 points, a percent loss for the mid caps as well. The pain is definitely increasing. But what's pulling up and supporting the markets? IT and banks. Infosys is now the top mover, 2% higher. ICICI Bank, after yesterday's move on the positive side, continues post the earnings cheer, about 2% higher for this one. Shriram Finance, Axis Bank, these are the other counters that are pulling up. Let's look at the broader, let's look at the F&O space. Some interesting names coming in there. Cholamandalam Investment and Finance, 4% higher. AU Small Finance Bank, that's another one that's also pulling up in trade. And IDFC First Bank, there is some kind of a recovery happening on this one as well. Broadham, in the F&O space, Osho, anything that catches your attention right now?
See, from F&O space, again, majority the traction is still in ICICI Bank only,
Yeah.
which has seen a very positive traction. While other fronts, there are many short calls that can be seen in the markets. Counters like Hind Petro, which I mentioned, Havels is looking very bleak to me. There can be some continuation on the lower end for Havels. Then Exide Industry is looking weak. So majority from F&O space, one can look for opportunities on the selling front, and that
Yeah.
can provide a very decent momentum for the day. And if there will be any kind of recovery or any stock or any sector which has cushioning, which is cushioning the market, then it is only the banking space. So one should stay long on the banking front, and any other counters are looking bearish. So one can definitely use the F&O space to go short in these counters and can book their intraday profit.
Okay, got that. So there you have a view coming in. Let's look at Kaynes Technologies again. 16% lower on this one. Osho, any opportunity on dip, or should one still stay away?
Definitely, one should stay away from this counter. There has been a very strong correction in the last two trading weeks from the zone of
Yeah.
nearly 6,500 towards 4,400 zone. And again, the technical parameters have turned towards the oversold terrain, but the whole market is into oversold from the last 1 or 2 months. But there has been no recovery in the market. So one should not be very much looking at these parameters as of now. If there will be any kind of breather, then only one can look for buying opportunities, because looking at the momentum that this counter have seen from the month of May 24 towards the December 24, there has been no strong base formation for this counter. It was into a buying spree. There was cycle of higher highs, higher lows. So there is no strong support base that is being seen on the technical front. So that is why it is better to stay sidelines. Once the counter consolidates and form a base for itself, then only one can look for buying opportunity.
Okay, got that. From the broader markets or from the Nifty Next 50, I'll also pull up one other stock, and that is Zomato. Some green being seen back, but 208 levels now on Zomato. Remember, we were so used to of seeing Zomato around 245, 250 odd levels. It was hovering around that, but the recent days sell-off has brought it closer to 200 odd mark. And Osho, it's very interesting, you know, when the stock was still hovering around 260, 250. 2250 odd levels. This used to be among the top movers, top favorite stock within the food delivery space, the quick commerce space, the new age technology space for most of the traders and analysts. And suddenly this last 3 months of a fall, especially last 1 month, the drag that has come in 2-3 weeks ago, again there is some question. Post the earnings, I would say, post the earnings of Zomato, when they raised the concerns about competition, when they front loaded a lot of their expenses, they did say that Blinkit will continue to make losses. Those were the statements that were coming out, and post that the downside has been continuing. How are you looking at Zomato right now at 208 for those who already have it at higher levels?
Yeah, I definitely remember that this was one of the favorite counters that we regularly discuss on this platform. But overall, looking at the recent development, especially in the month of January, this counter has seen a very strong breakdown from the zone of 245, which and has plunged below the 200-day simple moving average. And also on the technical front, if I have to say, then all the medium to long term moving average has been seen a negative crossover from the short term moving average. So there can be a continuation towards the lower trend in this counter. But overall, if I have to see the broader time frame for this counter, then in the month of April, May and June, this counter has been hovering. In last year, this counter has seen a very strong consolidation around the zone of 190. So I'm expecting that any further correction towards the zone of 200 to 190 can be seen as an opportunity, because technically the parameters have definitely turned very strong oversold into oversold terrain. But I'm expecting that looking at the result, quarterly earnings and everything has been factored in the prices in the fall of this counter, and any further correction towards the zone of 200 and 190 zone can be seen as an opportunity to accumulate the counter at a proper, or the approach will be to accumulate around the zone of 200 to 190. So that will be the level there where I am expecting that there can be a breather or a reversal that can be seen. Also looking at the technical front, it has seen a double top breakdown on this counter. So I'm expecting the target should be near about 200. So that will be the zone where one can definitely try to accumulate it for a higher target of nearly 245 from short to medium term time.
Half an hour candle is out, and we are now at 22,895, again below that 22,900 mark right now. The broader markets are in pain. Osho, now help us understand a strategy on the index level for investors after the first half an hour candle is out, for investors to remember, and key stocks that you could still look at some action in through the course of the day.
See, overall for index, I'll be having a bullish approach only once it breaches the zone of 23,050, or once it goes towards the zone of 22,800, because it is on a falling wedge pattern on the daily time frame chart, which is having a support near around 22,840, 850 odd levels. So better to wait for some further correction, buy around the zone of 22,820 with a stop loss of 750. On the higher end, 23,000, 23,050 is a resistance zone where one should try to book their profits. So this is the view for index as of now. Also, we have witnessed a breakdown of a consolidation. So the range as of now is 23,000 to 22,700 for Nifty. So accordingly, one should try to buy on dips and sell on the rises. While coming to the stock specific front, there are some of the counters which are looking very positive to me. First one is Bajaj Finserv. Bajaj Finserv has seen a decent traction in the last two trading sessions. From yesterday, the counter have started moving on the higher end. So I'm expecting that there can be some decent movement that can be seen in overall banking and NBFC space. So Bajaj Finserv can see some kind of positive traction for the day. Approximately 1710 should be acting as a support. While on the higher end, I'm expecting 1745 to 50 as the immediate target. While one more counter on the lower end, which is Havells, I already mentioned, it is looking very weak to me. One should try to have a short bit in Havells for the time being. Approximately 1465 should be the target, while 1520 should be kept as a stop.
Okay, got that. Well, Osho, we will thank you on that note for being with us on the show and helping us out with all the strategies right there. And viewers, we'll wind up the morning edition of the market today right now, right here at 22,908 odd levels, 80 points higher in trade. There is some uptick from the low point again. but it's been volatile. And if we look at even the India VIX levels, that's also hovering 1% higher at 18.3. So the levels are elevated, even though the spike is not as much today, but let's see how it progresses from here on. 22,900 is protected in the first half an hour of trade. Let's hope there is an improvement from here, although there are many aspects that are leading to fall in several pockets today. So the markets are looking volatile, at least for now, and Osho has suggested his strategies on both index level as well as key stocks, which you can definitely keep an eye out on. We'll wrap it up at that, but through the course of the day, earnings conversations will come in, market focused conversations will come in, and also strategies ahead of the budget is something that we will continue to discuss with you on our various shows and videos. So stay tuned on Business Today Television.
One of the most important conversations at the World Economic Forum in Davos has been around the impact that artificial intelligence will have on the workflow and on boardrooms in companies all across the world in the year 2025. To talk about the trends being witnessed globally and the implications